Hi everyone. So welcome to the stream today. Very much excited coming your way for another executive Q&A session. If you join the stream, you give us a thumbs up on the video, but most importantly, comment in the chat box with any questions that you have. If you know somebody that has to be part of this live stream and watch this live video, consider to share the video with them so that we can reach as many students as possible. So comment in the chat box any questions that you have for me. I'll be very much excited to answer all of your questions for you. Yesterday was intense. I had a question from a lot of you guys, and we spoke about a lot of issues. So you know somebody that has so you comment in the chat box with any questions that you have, and I'll be very much excited to answer your questions for you. All right, so let's see. What we got here. Comment in the chat box with any questions for me. Whatever questions you have, put them in the chat box for me. Okay. So I'm going to also provide you with some strategies, some techniques on how you can position yourself to actually pass the exams and ultimately take your life, your career to the next level. Okay, I see a question coming in. Let me see and answer that real quick as we begin the Q&A session. Zolak, I see you. Welcome to the stream. So let me open my chat box here. Now, so my first question is coming from Patience. I see you. You are welcome to the stream. Josie Machado said, how do you distinguish joint venture and joint operation? Joint venture and joint operation. Okay, so give me a moment. Let me share this to our group. Where again are we at? Forgive me today, my voice is a little bit distorted. I've been talking a while, so forgive me if my voice is not as good as it's supposed to be, but I hope that I'll be able to still answer your questions for you. All right. So let's see. Okay. Okay, so welcome to the stream. I see some of you guys joining the stream. Welcome to the stream. Give us a thumbs up on the video when you join, and consider to comment in the chat box with any questions that you have for me. Any questions you have for me. So let's prepare this now. Okay, so let me take the first question we have there. So my first question, yeah, good evening, Grace. I hope you're doing well. Welcome to the stream. Give us a thumbs up on the video when you join. And any questions that you have, you comment in the chat box for me. Forgive me for my voice a little bit today. It's been distorted a little bit, but trying as much as possible to be able to talk and keep you guys engaged as well and answer some of your questions for you. Emmanuel Addison, I see you. Welcome to the stream. Any questions, put it in the chat box for me. I'm going to be answering all of your questions for you. So let me take my first question from Chelsea Chamado. She said, how do you distinguish between joint venture and joint operation? Now, with a joint venture, it is a business arrangement where two or more parties agree to pool their resources for the purpose of accomplishing a specific task. So it can be a new business activity or maybe a new project on that, and that is a joint venture arrangement. Now, what happens in a joint venture is that the joint venturers, that is, if you and I put our resources together, we have a right to the net assets of the joint venture business. Joint operation is also the same thing where we are pulling resources together, but then the joint operation, the parties that have joint control over the arrangement have a right to the assets and to the obligations for the liabilities of the arrangement. So what it is that joint venture can be just a project we are working on, while joint operation can be a new business that we are establishing. So that in that case, what is going to be happening here is that since we have control, or anybody that has control over the arrangement has a right to the assets and also has the right to the liabilities of the joint operation. So that is what we can talk about in relation to the distinction between the joint operations and then the joint venture. In both cases, we are pulling resources together, two or more parties putting resources together in order to undertake a project or a specific activity. The distinction is that with a joint venture, what happens is that the joint venture has a right to the net assets of the joint venture. However, in a joint operation, what happens is that the parties that have joint control over the arrangement have a right to the assets as well as the obligations for the liabilities of the joint operation. So technically, they are almost just the same thing at the end of the day. Pawili, I see you. It's been a long time since I heard from you on a live chat. I hope you're doing well and you are preparing for your exams well. Any questions for me, put it in the chat box and I'll be answering all of your questions for you. So put all of your questions in the chat box for me. Let me answer them. Then I will also try to provide you with some strategies as well. Let's see, let me use. Okay. All right. So comment in the chat box things for me, and then I'll be able to all of them for you. Yesterday was very intense. I like the line of questions that came in from you guys, and let's see what else I can do today for you guys, what questions you have for me, and then let me provide you with some answers on those questions as you prepare for your exits. So let's open this here. Just changing over devices so I could get a better video quality. Okay, so Emmanuel Addison said, please, is calculation of risks in asset portfolio, correlation and covariance still under the new syllabus in FM? I don't see it so. And then the new syllabus in financial management. No. That is not there. That is not in the new syllabus. Yes, so it's not in the new syllabus. Zolak, let me confirm this. Let's check. Okay, I have my syllabus here. Let me just go through it and let's see. Any other questions, please comment in the chat box for me with all of your questions. And then most importantly, give us a thumbs up on the video. In case you've not subscribed to the channel also, come on now, why haven't you subscribed? Hit the subscribe button and the notification bell icon. That way, when I go live or release new content, you'll be the first person to be notified so you can prepare for your examination. So let me just scan through the syllabus and find out what are you talking about there? FM. Okay. Financing decision, blah, 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 blah. Okay. And the risk management, let's see if this thing is there. Charles Zuli, I see you. Yeah, Emmanuel Addison. No, I don't see that really directly in the syllabus, but I will look at it again, like when I get time, and then possibly tomorrow on the stream, I could answer that better for you, okay? So that you understand what is happening there. He said, in what ways can one incorporate company in Ghana? If you want to incorporate a company in Ghana, all you do is to go to the Registrar General Department and decide what kind of company you want to establish, sole trader, partnership, private companies, or as a permanent establishment, a branch, or something like that. So depending on whatever company you want to establish, go to the Registrar General, and before that, you may need a tax identification number because that will be a key requirement for the registration. So once you have all that at the Registrar General, registration will be able to be done for the company. Nana Atrem said, please, is suspense account in financial accounting? Yes, yes, Nana Atrem. Suspense account is in financial accounting, right? It's one of the key topics in there. Correction of errors in suspense accounts. It's one of the key topics there, all right? And I have done a video on that on my channel. You can check the playlist titled, I think, Financial Accounting also. Let me check that out. I don't like my voice at all today. Let me check this out. Yeah, Financial Accounting Lectures. That is the name of the playlist on my channel. Financial Accounting Lectures. You can check out that playlist there, and it can help you on suspense accounts and correction of errors, so you understand it. Charles Zuli said, please say something on treatment of loan benefits and the income tax of individuals. Okay. Charles, our Saturday tax lectures discussion that we did is available on the portal. I advise that you watch that if you have not watched it, because you are one of my students learning under my mentorship online. But loan benefits, what happens here is that we're going to find the statutory rates, and then against the rates that maybe the statutory rate is 20%, but the company gave the loan to the employee for say 10%. So we find out the difference between what interest you should have paid and what interest that was actually paid. Then the 1/4 of that is added back to the income of the person, of the individual, in the determination of the total tax liability, or in the determination of the chargeable income of the individual. So I will advise Saturday we solve the question and I explain all of these principles. So make sure you watch those lectures on Saturday discussion on the study portal, and you'll be able to understand that well. Grace said, sir, can you take us through impairment of assets? Now, when you say impairment of assets, like, do you mean the whole show, Grace? Do you mean the whole show? Josephine Annan, I see you. Okay, so when it comes to impairment of assets against IAS 36, we need to find out whether, let's take it this way. An asset is impaired when the recoverable amount is less than the carrying amount of the asset. So for instance, you are carrying the asset at say 20,000, but the recoverable amount of the asset is say 1,000 or maybe 18,000. So since the carrying amount is more than the recoverable amount, or the recoverable amount is less than the carrying amount, we say that the asset has suffered an impairment. But note that the recoverable amount of the asset is always the higher of the value in use and then fair value less cost to sell. So when we say value in use, we mean the present value of the future cash flows on the continuous usage of the asset discounted at the cost of capital of the company. Then the fair value less cost to sell simply means the net realizable value of the asset. So when we say the net realizable value of the asset, it means the fair value of the asset less cost to sell. So when we compare the two, that is the value in use, which is the present value of the future cash flows on the continuous usage of the asset, against the net realizable value of the asset, the higher of the two becomes the recoverable amount of the asset. Remember that when we are talking about impairment of assets, when we are talking about impairment IAS 36, we are not just talking about impairment in the context of assets, but we can also have impairment of a cash generating unit. A cash generating unit can be a group of assets, a collection of assets, or even an entire business can be a cash generating unit. So for instance, during this live stream, or in the live stream that I'm using, I have a laptop, I have a tablet, and then I have a device here. This together can be a cash generating unit, all right? So if we get the recoverable amount of the cash generating unit, and then we look at the carrying amount of the cash generating unit, that is the group of the assets, that generates some economic benefit to the entity, and compare, and we realize that the recoverable amount is more than the recoverable amount is less than the carrying amount, then the asset has suffered an impairment. Now, the reverse is true. If the recoverable amount is more than the carrying amount of the asset, then that is going to be a revaluation gain, okay? Because an asset cannot be carried over its recoverable amount. So at least an asset should be carried at its recoverable amount. So if the carrying amount of the asset is, say, 2,000, and then you did a calculation and the recoverable amount is 2,500, that means that the asset must be carried at the recoverable amount of 2,500. So in that case, there will be a revaluation gain of 500. That is the difference between the recoverable amount of 500 and then the recoverable amount of 2,500 and then the carrying amount of 2,000. So that is what you have to understand when we talk about generally impairment of assets. Then another thing about impairment of assets is the allocation of impairment. So how do we allocate impairment? The standard states that impairment should be allocated as follows. That is number one. We first write off separately identified impaired assets. So if there are some assets that are separately identified, that are separately impaired, we write them off. If there is still some amount left at the end of writing that off, then we will write off goodwill. After we write off the goodwill, if there is still an amount left, then we will going to be apportioning that, or we allocate that in proportionate basis on the remaining assets. Note that, or take note that cash, receivables, and payables may not suffer any impairment. So any amount that will be left will be allocated or shared among the other non-current assets that we have in the question. So that is it about impairment of assets. I really don't like my voice. I really don't like my voice. Forgive me, okay? My voice is not allowing me to talk well today. Grace, are you okay with the explanation on that? Let me know in the chat box. If you join the stream and you have any questions, put it in the chat box for me. I'm going to try as much as possible to answer your questions for you. Nana Atrem said, I learned most accountants use suspense accounts to defraud business. I got a news that they want to remove suspense accounts. That is why I asked. Why or how would the accountants use suspense accounts to defraud businesses? You see, this is what happens about suspense accounts. When you extract the trial balance is supposed to balance. At the end of the day, if the trial balance doesn't balance, the balancing figure is temporarily put into a certain account. That account that the balancing figure is put into is what is called a suspense account. So at the end of the period, what is going to be happening here is that we will now investigate, we will now go through the accounts again and find out maybe there are some errors, there are some omissions, there are some error of principles, there are some complementary or compensating errors. So whatever errors we identify, it will now be corrected in the book. So suspense account is actually a good thing. I don't know where the news is coming from. I've not heard it though, but I don't know where the news is coming from. And suspense account cannot be removed really in accounting, because whether you like it or not, at the end of the year or at the end of a period, when we prepare financial statement, there could be some misstatements. There could be something we need to add there in that case. So if there is something we need to add there, then we must put that temporarily in a suspense account. Then we can now investigate and find out the consequences of that. So that is what I can say there in that case. Jonas, I see you. You are welcome to the stream. Charles said, okay, thanks, sir. I joined late on that day. Yes, so that is why the video is available on the portal. So just go to your student dashboard, your members dashboard, open the principle of tax course, and then check out the last Saturday lecture videos and watch them. Okay, it's very important you watch those videos because whatever it is, I explain some core principles, some core concepts. So make sure you watch it. That is why the study portal is there, so that if you miss the Zoom session, you will be able to rewatch the playback. So go and watch the playback, and if you still have some questions, you can direct message me and we can talk about that. So Grace said, thank you, I'm okay. That's awesome. Okay, Patience is asking the source. So Nana Atrem, where did you get the news about suspense account or accountants defrauding businesses? I think Patience wanted to know so that she can read and know why. Then Nana Atrem said, okay, thank you, sir. I hope there is a video on cash flow statements. I can't tell that though, but there should be a video on cash flow statement. We have over 400 videos on the channel, over 400 videos on the channel. So whatever you are looking for, chances are it's already available on the channel. All you have to do is to search the channel or look at the playlist there, and whatever video you want may be already on the channel. Any other questions for me, please? Any other questions for me? All right, let's see. Okay. Wanami Godwin, I see you. Welcome to the stream. Baras, I see you. You are welcome to the stream. Patient said impairment. I just spoke about impairment. You missed that. I just spoke about impairment. Ebenezer Kofi said, sir, please, what is the link to your study portal? The link to my study portal is nhyirapremiumuniversity.com/courses. But the courses available on the portal are paid courses, all right? And Charles Zuli is one of our students studying under my mentorship online. So you can call or WhatsApp us if you want to enroll in the course, 050-114-9296, 050-114-9296, and then you'll be able to get an enrollment on that. But the link is nhyirapremiumuniversity.com/courses. You can find the link to the description of this video, and then you click through it. Nana Trim said, please, how would you advise someone without accounting background in university to pursue ICAG? Okay, so let me say this. You don't need an accounting background to do ICA. Okay, it all depends on your determination, your readiness to study, and your ability to go through the things. Now, like I say all the time, one of the dumbest things that you hear people say is, oh, ICA is difficult. And you will see people making some dumb statements like, even we, those who did accounting in the university, when we write the exams, we fail. Don't be listening to those dumb statements, okay? The fact that you did an accounting in the university doesn't mean you know anything. Chances are you don't even know anything, okay? You don't even know anything. So what I would say is this: irrespective of your background, if you want to do the ICA, you want to do any ACCA, you want to do CIMA, you want to do CPA, whatever it is you want to do in accountancy, what I would suggest to you is this: you need to be dedicated and have the mindset that it is possible, I can do it, okay? You don't need to do accounting from SHS or from high school or in university to do the ICA. All I would advise is have a mindset and be positive about it, that this thing is possible, I can do it, it is my first time, but I'm going to put in the effort, learn all the fundamental principles and understand the concept and understand the principle very well. Then you have to audit your environment. Like I said, people will tell you that, hey, you've not done accounting before, now you want to do ICA. And the way you will suffer, we those who did even our MBA, we are failing. Maza, if you did your MBA and you didn't learn well, just put it somewhere. Let's talk about something well. So Nana Atrem, what I would say is that it's all about the mindset. If you have a mindset that it's possible, I can do it, then you are ready to sacrifice, put in the effort, put in the sacrifices needed to be able to get the job done. I can guarantee you it will be easy, it will be smooth, and it will be very, very just joyful as you go over the journey. So that is the advice I will give. No background in accounting, don't worry. Start with the mind and win from the mind, and it is possible, you can do it. Does it make sense? Does that help you? Nana Atrem, let me know if it makes sense to you in the chat box. Patient said, how to relate impairment to practical life. I was listening, please, but I want to understand how practical it is with examples, please. Now, if you say how to understand impairment in practical life, I don't know what you mean though, but assets suffer reduction in values. This is what it means. When companies buy assets, they will be depreciating the asset. So they will buy an asset for say $20,000 and they will be depreciating the asset over the life of say 10 years. So $20,000 over 10, that is going to give us $2,000. So every year they will be charging depreciation of $2,000. So let's say that the asset has been in operation for 5 years, meaning the accumulated depreciation is $5,000. So the carrying amount of the asset will be $15,000. If at that date something happened to the asset and the value of the asset reduces, that is the fair market value of the asset is now at say $9,000, we are carrying it in our books at $15,000. But now the recoverable amount of the asset, the fair value of the asset in the marketplace is just $9,000, meaning that the asset has fallen in value of say $6,000, and that is what we mean by the impairment of the asset. So the impairment of the asset is about comparing your carrying amount, the way you are carrying the asset in your books, as against the recoverable amount, which is the higher of the value in use and then the fair value less cost to sell. So that is what we can talk about in relation to impairment of assets. I don't know if that is practical or that sounds practical to you. Let me know in the chat box if you understand it now. Nana Atrem said, God bless you, sir. Thanks for your motivation. God bless you too, Nana Atrem. Josephine Allen said, sir, please, can you explain the roles of pension regulatory authority and national insurance commissions? National Insurance Commission. Generally, you can Google this and then you can be able to get it, because I don't really have solid points to be said about some of these things. But pension regulatory authority, some of the things they do and look at is making sure that employees are paying the pension for their employers are paying pensions as required by the them on behalf of their employees. and also ensuring that the pension funds are invested properly to safeguard the interest of the contributors, which is the employee in that case. But like I said, I will not have solid points to be able to talk about some of these things. You could Google them and you'll be able to get some points on that. Any other questions for me in the chat box? Okay, Patient said, grateful, said, so grateful chancing on this channel. God bless you, sir. God bless you too. Kwame Ike said, please say, hope you will discuss the case study with us. Thanks. Yeah, we've been receiving a couple of notices about that, and we are planning to do that. But I don't know, I'm hoping that I'll be able to have my voice back, and definitely we'll be able to have such a discussion. I don't know, for some reason, my voice is just going off and getting terrible. I'm under medication though, so it's going to get better, definitely. Then I could, and I'm not supposed to put stress on it. I'm supposed not to even be talking. I'm supposed to be, I'm told I should relax. I shouldn't be talking a lot. But this times we are in, definitely, I cannot just keep quiet because I even have lectures with our students during our executive revision master class. And imagine me saying that I won't do a class unless Grace arrests me by the police, and Charles Zuli will be chasing me with the police as well. So I will definitely be looking at that, and we'll be having the discussion on the case study. So definitely we will have a discussion on that. Josephine Annan, okay, giving me an emoji, something like that. Any other questions for me, please? Any other questions in the chat box for me? Now, so Joy M, thank you so much. I know LIFO is not allowed in IFRS, but it's part of US GAAP. Do you mind talking about the effect of rising prices for LIFO, FIFO, weighted average, simple average? Yeah, if there are, now that is a whole discussion on its own, but I don't think I have a video on that on the channel, but I could provide you with some thoughts, but certainly not all of them in that case. LIFO is last in, first out, and if there are changing prices, I think the last in, first out is a good thing, so that if I buy it at the current price, I sell it at that price. But with FIFO, what is going to be happening here is that I will still be selling the product at the price at which I bought it some time ago, even though the replacement price has currently changed. And so that could affect the valuation of our closing stock in that case. Maybe this is what I can do for you. There is a video content we have. We have some content available on these methods of stock valuation. Maybe we will release them on the channel so that you'll be able to look at that in much detail. Okay, so Joy, and we will release the content about that on the channel so I can answer you better. Vera Owusu said, good evening, sir. I'm late today. Please, can I ask a question in PSA? Yes, you can, Vera. I'm listening. What is the question? Put it in the chat box for me. Give us a thumbs up on the video, okay, when you join the stream. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as many students as possible. And in case you've not subscribed to the channel, also consider hitting the subscription button or subscribe button, and then the notification bell icon, so that when I go live, you'll be the first person to be notified. Vera, I'm waiting on your question. Vera, you can type your question out. And then any other questions you have, put it in the chat box, and then I'll answer your questions for you. All right. So as I wait on Vera to ask her question, one of the things that you need to understand in these times is, okay, I think there are some people watching case study. Let me let me say some few things about the pricing information for you to understand what is happening in there. Now, when it comes to the case study analysis, there are a couple of things you must know. Let me grab my slide on that. There are a couple of things that you must note. Now, for those of you watching case study or doing strategy case study, as you can see, my paper is in the way I've messed up the paper and the writings that I have inside. So let me share some things with you briefly, quick. Where is this information? Okay. So in reading a case study, there are a couple of things you must understand. Number one, you must understand that the industry the company is in, the expertise of management, what are critical, that is CSF, that is a critical success factors of such businesses. What problem is in the question? What strategic alternative can be implemented to solve the problems? And then how will the strategies be actually implemented? This is where the McKinsey 7S model comes in to talk about the hard factors, the soft factors, and then certainly there will be something on performance evaluation. So when you're reading the case study, these are a couple of things that you must take into consideration. Then primarily also going to be having questions in some key areas like corporate strategy, that is strategy formulation, implementation and evaluation. Then corporate governance and ethics, there is definitely going to be a question on that. And then some issue about financial analysis. There is always going to be some questions about financial analysis. So just as a teaser, this question was asked by Kwame Ike. I don't know if you are still watching though, but these are a couple of things you must note about it. We've discussed and we are in the discussion with our students there. Vera said, please, I want an explanation on weakest link method. What is weakest link method? Vera, what is weakest link method? Oh, what is it? What is that about? What is it under? Can you clarify that for me? Weakest link method. So clarify that for me, Vera. Erisa, yeah, I see you about that. It's been a long time since I heard from you, Erisa. I hope you are doing well. Oh, it's not been long. I don't know. I think it's been a long time since I read that name. Let me see the question that this lady is asking. He said he saw it in the question. Let me see what you were talking about. Legislation scrutiny and audit indicator, a score of AA and AD were obtained on 3 dimensions. This indicator is measured using method 1, weakest link method. Required. Compute the cost, compute each. Right, this is under PIFA, like the indicators. There's a whole discussion on it all. I may not be able to cover it today for you, Vera. Maybe, especially today that I'm not really good with my voice, but I could cover this for you maybe tomorrow or Friday in that. I discussed something under the PIFA. I have a video on that on the channel, so you can check that out. In the meantime, then maybe later on, I can touch on the methods of looking at some of the indicators in the PIFA. Okay, so I can do that for you later. Erisa said, yes, I am doing great, sir. All right, Erisa. Then Erisa said, what is the treatment of donated assets in public sector accounting? Assets that are donated are accounted for in accordance with IPSASs 23, that is non-exchange transactions. The initial value of the asset will be the fair value of the asset at the transaction date. So that asset that we receive at the transaction date will determine the fair value, and we debit the property, plant, and equipment with that fair value, and then we credit our revenue account with that asset in that case. So that is the double entry for that, or credit donations. That is the treatment for donated assets. Erisa, does it make sense? I hope you understand. Okay. All right, Erisa, you're welcome. Any other questions for me? Any other questions for me? Okay, it makes sense. All right. So, like like yesterday, I discussed a couple of things with you on the strategy. Okay, Vera too is bringing a question up. Let's see that. How do I get capital expenditure in computing capital expenditure to total expenditure? That is given in the question. All right. In the trial balance, you will be told the assets that were acquired during the period, the infrastructure that were built during the period, the new work that was started during the period. So usually in the trial balance, you'll be able to find out the capital expenditure during the year, or you will see an increment in the non-financial assets, which is infrastructure, property, plant and equipment, work in progress. You will see an improvement in that from the previous year. So anytime you see something like that, that means that is what? A capital expenditure. Do you get it, Vera? Joy M said, how often do you come on live? I come live every single day, 4:30 p.m. or 16:30 GMT. So it's an everyday job in that case. Any other questions for me, please? Any other questions? Any other questions for me, please? Let's see. Okay. So Vera said, yes, please, I get it. Thanks so much. You're welcome, Vera. Okay. Okay. So if there are no other, Kwame Ike said, explain equity accounting, please. In what context are you asking this? Is it under saying that you are looking at, your friend is saying, how do we call it? IAS 28 or what? In what context? Let me know the context in which you're asking the question so I can answer it for you well. But if I think it's about group accounts and it's about IAS 28, if that is the context in which you are asking it, then it is where the investment in associate is accounted for using the equity method. So as far as we are owning, owning less than 50% of the company, we're going to be having significant influence. So we account for our investment using the equity method, meaning the carrying amount of the investment will be the cost of the investment, our share of profit or loss post-acquisition, any dividend we receive will be subtracted, and then any impairment on the dividend will also be subtracted. Then certainly if there is any goods we sell to them and there is provision for unrealized profit, that is also going to be deducted from the investment in associates. So that is what you must understand if you are talking about the equity accounting and IAS 28. Does it make sense? I hope that answers your question. Okay. All right, so if there are no other questions for me today, then I'll be signing off our discussion today here. Like I said, just wanted to come your way and then answer any questions you may be having as you prepare for your exams in the final days. Definitely next week by this time, you have finished your second paper and you are cruising gradually to the end of the exams. So I'm going to conclude here today. And like you can hear from my voice, like it's not too good. And I'm hoping that by tomorrow I'll be much better so that I'll be able to teach, because actually I plan to actually teach something today, but because my voice, I struggle to speak out. So I'm going to be concluding here today, but God willing, tomorrow I'm going to be coming your way and we're going to continue with our discussion. So continue to study, continue to work hard, make sure you understand everything that there is to be understood, and make sure that you look at the issue in relation to practicing a lot of questions and understand the structure of the examination so you can increase the chances of passing the exams. Okay, Kwame Ike said, thanks, sir, you're welcome. Patient said, God bless you always. Amen. God bless you too. Wanami Godwin said, sir, comment on advanced variance for me. Advanced variance, if you're talking about advanced variance, then it depends on where you are standing at. If you're talking about material variance, then the advanced variances there will be issues like the material price planning variance, the material price operational variance, the issue about the mix and the yield variance. Then if you're talking about the sales variance, then we can talk about the sales mix profit variance, sales mix quantity variance, sales profit volume variance, right? And that's a whole lecture on its own, and there's no way I'm going to be able to do that definitely today. So those are the advanced variances and how they are computed. Vera said, talk about IPSASs 32. That is a whole lecture on its own. Today we discussed that during our executive revision session on that, where you are looking at how you recognize liability, how you recognize revenue, how you recognize expenses, and then the assets. So that is a whole lecture on its own. Vera, maybe tomorrow or Thursday could teach something on that and provide you with some assistance in that case. Patient said, please take in more fruits vis-a-vis vitamin C, speedy recovery, sir. Yeah, thank you very much. I'm already, in addition to the drug I'm taking, I'm already on vitamin C. So thank you very much. And hopefully tomorrow I'll be better and be able to lecture and explain this to you. So Vera, like I said, IPSASs 32 is a whole lecture on its own, and we'll be able to look at that as a complete lecture. Kwame Ike said, God bless you, amen. When are you coming live again? Every single day, 4:30 p.m. So I'll be live tomorrow, 4:30 p.m. or 16:30 GMT again on a live stream. So you can join me tomorrow if you have any questions for me. And I shared some tips on the case study that you asked earlier. I mean, I hope you were able to get that. Dachi Hine said, good day, sir. Please, I wish to write ICA in November, but I need a recommended textbook to buy, especially financial reporting part 2. Dachi Hine, you can send us a message on WhatsApp, 050-114-9296, 050-114-9296. For recommended textbook, definitely I'll recommend my new book that is coming out at the end of this month. I'm publishing 5 new books, and 2 of them is on financial reporting, the standards, and then financial reporting in general. So you can send us a message on this so that when the books are released, you'll be able to get copies on that. You could buy it directly on Amazon as well, but it will be released at the end of this month. So you can send us a message, 050-114-9296, 050-114-9296, and be able to maybe place pre-order or something like that, so that when it releases, you'll be able to get it there in that case. And I also offer lectures both online as well as on campus. So you WhatsApp this number, details of that as well will be sent to you. Josephine Annan, God bless and speedy recovery. God bless you too, Josephine, and thank you very much. Vera said, okay, sir, thanks. All right. So thank you very much, and continue to study. If there are any things you don't want to do, you can send all your inquiries to 050-114-9296, and I'll see you same time tomorrow as we continue with our discussion. So till we meet again tomorrow, take care of yourself and stay blessed as you prepare for your examination. Bye-bye.